Okay, hey everyone, it's Michael Valtos here from Orderflows.com, and this is the Orderflows market analysis for Thursday, May 4th, 2017. And all you Star Wars fans, may the 4th be with you. You only get to say that once a year. Now, it was an interesting day. Big movement in the crude oil. Crude was down about $2.50 to around 45.5, 45.50, which is about 9 or 10 months lows. Amid talk of overproduction. Is that a bad thing? Well, no. If you got a car, you got to be loading up gas. It's summer. Go for it. Now, again, stocks were mixed. Stocks have been mixed pretty much, going back to last week. And tomorrow is the non-farm payrolls. Today we had some data come out, which was another batch of basically very low jobless claims data, and that's pointing to a healthy labor market. So we'll see if there's strength in tomorrow's employment number. One thing is jobs may have been good to have, plentiful, but productivity actually seems a bit weak. So we'll see. We'll see what's going to happen. Obviously, you got the French election this weekend as well, which is going to add a bit of volatility come Sunday night. So watch the reopen on Sunday. He said be careful if you got any open positions going into the weekend. So the disclaimer: this presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Quickly, the tools that I use in this presentation: the Orderflows Trader, the Delta Scalper, the Delta Surge. I may talk about a few of my other indicators, but these are the main ones that I like to use in these presentations. The other indicators are a little bit more advanced, but quite potent. So let's jump in. The first market I want to talk about today is the soybeans. As I said, it's not a glamorous market by any stretch of the means. When you tell people you trade beans, they think you're some sort of a farmer or something. And but again, like I said, beans I think is one of the contracts that made more millionaires than any other contract. That was probably up until about 2000, when everything was more open outcry, pit traded rather than electronic. But now electronic, I do think it's soybeans have sort of taken backseat to some of the other contracts out there. But nevertheless, interesting thing here in the beans. Again, at this, it opens. Well, I'll say opens. The reopen for the day session is 8:30. Okay, in case you're wondering. Now we had made these lows overnight, and we kept touching them as you started getting into the day session. 970.50. We made the low roughly before 2 a.m. Chicago time. Now 5:09 you hit the low again, you bounce up a little bit. You've got a divergence there. Hit the low again at 7:40, bounce up again. You got a ratio and a divergence, and we close, and we come into 8:30 open. And 8:30 we tested again. You got another divergence. So you're hitting these lows and you're seeing buying come in. Okay, then you hit it again at 8:56. You bounce up off of this. This time you don't have a divergence, but this time you shot up. The one without the divergence, you shot up. Literally just up to your highs, made new highs. And this is the Delta Scalper here. But it's a doji bar again. Doji bars are a bit, for me personally, I've always found doji bars to be neutral in reading the order flow. I mean, the only thing that I'll read in it is the delta, but I won't, that's why you see no ratios above or below. Now we come into these highs, you got divergence, both of them failed. As we made new highs, we come in, we make new highs, boom, stack buying imbalance. That's what you want to see. You want to see the aggressive buyers coming in as you're making new highs. It just looks better visually than you have here. What you got maybe a combination of people coming in saying, we're going to go higher, I want to get in. Two, you could be having stops as you breach the new high. And you do come up, make new highs by another, this is what, 979, you get up to 980. Now this is interesting, at 980, well here at 977.5, you do have the Delta Scalper kick in. It failed. I'm not gonna say, oh, you could have read it. No, it just gave you a bad signal. I'll say bad signal, but the market, there was still buying, and you can see it come in and manifested in this stack buying imbalance. You get another chance up here at this high at 980. Okay, and what happens? You got a divergence as well up there. The ratio is 1, so it's the order flow is about it's about average, and you start selling off from 980. Boom, 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 going down, back down, 975, 974. You sort of pause here, 973. You do get the delta scalper given a buy, so you had to move from 980, 979 down to 973, 974. You get a little bit of a bounce. You got the price trajectory, you got the delta scalper, you got point of control towards the bottom of the bar, you got positive delta. Is this going to be enough to stop the move? Maybe, maybe not. The key is going to be this next bar. Now it's interesting, as you're coming down here, you see the deltas minus 500, minus 400, minus 200, minus 41, positive 271. So that's, you're seeing the market go lower, but the net selling is getting a little bit smaller. Granted, it's market's moving pretty quick here. This is all 10 o'clock here, and it's 10:01, 10:02, 10:02, 10:02, 10:02. So this sharp move down is slowing down a bit. Granted, it happened pretty quick, but it's still slowing down. You get a little bit of a bounce. If this bar was green, if this bar had positive delta as well, I would be a lot interested in thinking this market can start to rally again. Because what you're seeing is you're seeing a move down, and you're seeing the deltas declining, right? So you're seeing the net selling basically petering out, and then all of a sudden you see buying come in. But again, just because you have a one bar with positive delta in a down move, all of a sudden doesn't mean the entire move is over, right? It could be just a bounce. People that got short above taking profits. It could be anything. Say anything. It could be several things. But then the selling comes back in, negative delta, boom, boom, boom. We go down lower. Get down to 970, 1 1/4 here. Point of control right on the bottom of the bar. You do have a ratio bounds low. You get a little bit of a pop. Again, delta scalper giving you a buy here. Now again, you sort of have this delta declining, minus 305, minus 266, minus 18, starts turning up here, 123. Okay, it's looking good. Maybe we could start rallying. Even here you got positive delta, but the bar and the price action tells it it's going to go lower. But already at this area, I do know earlier we had tested these lows at 970.5 several times, and we're getting down to, within a cent of this low. So, I'm starting to see some bullish things coming in here. I'm seeing ratio bounds lows. We get down here to this bar. It's another ratio bounds low. And, so I'm already thinking that, maybe there could be some support here. We'll see. We'll see, if it can hold or not. Again, it's not the low of the day. It's still a little bit above the low, but again, I'm curious. Right now we start going sideways. If you had taken a long off this, really, at best you would have maybe lost about a penny, or not a penny, more like a couple ticks, or maybe broken even. Then we start coming down into the lows. Now remember this level here, 971, right, where you got here you got the ratio bounds low, then one tick below it, 971. Well, it's 971.25, 971. Yeah, you do have some volume there. I'll say big volume, but it's decent volume, 200, 136, 125. And when you start seeing these volumes, these big, I'll say big volumes, but chunky volumes, sort of supporting the market, if you get past it, right, watch out how you get past it. Is selling aggressive, or are you just sort of getting past it or not? Like here, we get past it, selling imbalance 283, 167, 78. You're going into the lows on aggressive selling. That's what you like to see. And you do make new lows, not much, an extra half a cent. And here you get a divergence with the ratio, and you do get a little bit of a bounce up, a couple cents up here, from 970.5 up to 972.5. Then you get down to this bar here at 1051, and you have 1053. Okay, so imagine, just think about it. Close your eyes and imagine what you're seeing here. 969 3/4. There's a decent bid, whether it's showing or iceberg. It doesn't matter. I know a lot of people talk about, oh, you got to look for these icebergs. Well, you know what? Honestly, icebergs appear in most markets on volumes above 25. Honestly, I do not know an institutional trader that does not iceberg an order that is above 25 lots, unless he really wants to show it to the market and scare people. But generally, most orders are iceberged above a certain size. And getting into crude oil, most people that I know that, and again, I know big traders at all the banks and a lot of the big commodity trading firms, sizes above 10, they're already iceberging it. So, you're coming down here, you trade 52, you trade 25, and you're hitting this level here. Okay, you're pounding into it. There's support there. What's going to happen as you get through? Can you get through this level? It's trading 100, 200, 300, 400, 500, trades 1,000, finally gets through it, and then it trades 969 and a half. It's 969 and a half bid offered at 3/4. It trades 141, and then all the selling is gone. You don't see any aggressive selling below this level. As like you saw here, you saw some aggressive selling come in. You saw these imbalances. So, all these people that were selling it, trying to get it to go lower, they're not able. They get it lower. They get it lower by a tick. Where's the aggressive sellers? Where's the other traders coming in here to start selling? Where's the big guys coming in and say, oh, I got to sell. We're breaking this is an important level. I got to sell some more. They're not. They're not there. And for breakout traders, people thinking, hey, we're making new lows here. I got to sell it. Well, anybody that's doing that, thinking, hey, we traded 900 there. If we get through this, all hell's going to break loose. Yeah, it might, but you got to watch what's going to be, what's going to happen at the next price level. Instead, you see more buying come in, 141. 141 doesn't look like much when it's compared to 1,000, but it's a decent amount in this market. And you see that it's just a support level. Now there's buyers here, and you even come down, you hit this level again, trades 5, and then we get this nice rally all the way up, from 970 up to 974 and a half. You got a ratio bounds low up here, telling you there's stopping volume at the end of this move, this ratio up here, and you come off a little bit here and go sideways, going into the close for the day. Now, what I just talked about, with the deltas, I'll show you a better example. Well, I'll show you a nice example that happened, during the trading room session. It was in the E-minis. And it was very interesting. I was talking about it in the room when we were coming into the lows, and it was on the 4-range chart. Now again, it all depends. What you're seeing on a chart depends on what time frame. Like I have a 10-range chart open, I have a 4-range chart open, and you could see it happening on the 4-range. You didn't necessarily see it happening on the you didn't see it happening on the 10-range. But I'm just going to talk you through it. This was this morning, just before 9 o'clock. Okay, so cash opened in the S&Ps, and we opened around 86 and a half, roughly. Sold off over the next 30 minutes, went into the lows here. Now this sort of structure here, this is the beauty of order flow, right? It's giving you information. People always hear me talk and say, oh, you're trying to pick highs and lows. No, I'm not. I'm reading the order flow, and if it's telling me hey, the market is starting to bottom, then okay, the market's starting to bottom, I'm looking to buy. I'm not trying to pick lows specifically to say, yeah, I picked the low or anything like that, or I picked the high. I said I'm not predicting that. Instead, I'm reading what's coming in the order flow and taking advantage of it. And the delta is something that really helps you out in that sense. So we're coming into these lows, right? We had just from 86 and a half, we're trading down. Now we're trading down to 81 and a half, 82 and a half. And look, you got delta minus 1497, minus 1419. So it's getting lesser. Granted, there's not much difference between 1497 and 1419. And then minus 636, and then positive 41, positive 1197. So what do you see here? You're seeing, even though these are kind of biggish deltas, negative deltas to be honest, it's still declining. Minus 1400, minus 1419. Minus 600, and you get positive right on the bottom, a small positive some more. It's not like a big one, which I'll show you in the 10 range. But selling is declining as you come into the bottom. We're starting to bottom, and while in this bar you had a mid delta of minus 882, it ended up at minus 41. So you had selling early in the bar, right? It was looking like hey, we might go lower. We got strong. We got 800 negative delta. But what happens? Buying comes back in. The bar closes up. Final delta of 41. Next bar 1197. Okay, that's what you like to see. You like to see selling, drying up, so to speak, getting weaker, but buying starting to get stronger. So, if you're getting long in this bar, where you have, actually, you got a couple things. You got the delta surge, you've got the a ratio. This previous bar, you did have the delta scalper give a buy, actually. And what happens is, so from 82, 82 and a half, what does the market do? Boom, it trades back up to 86 and a half. That's that's the move. It takes 30 minutes and to make. But it was something that I sat there, explained it to everybody in real time as it was happening. This is ideally what you like. Does it always happen? No. Does it always happen at every high and low? No. But when it does, it looks beautiful. I mean, that's what you want to see in the markets. So, those are the two interesting things. I'll be honest, after 11 o'clock, I didn't look at the markets. I had some other stuff to do. But again, I'm going to keep this one a bit short today with those two examples. And like I said, again, tomorrow's non-farm payrolls, and the weekend is the French election. So it'll be interesting Sunday night. If you're a market junkie like myself, you'll be sitting in front of your screen watching the market reopen, and then see what the fireworks are in the S&Ps, and then obviously when Europe opens, again, it'll be very interesting to see what happens. Okay, actually, you know what? Before I go, I'll talk a bit about the 5 years. 5 years were interesting as well, honestly. And it's something that you could only get if you're reading the order flow. And what had happened was, in the morning, 7, 8 o'clock, you'd come down into this low area down here, basically between 118.00 and a half and 118.02 and a half. And there was very decent volume in these two bars here, 830 to 848. Between 01 and 1.5, there's about 40,000 contracts traded here. Right off this, the low is here at 00 and a quarter, but at 00 and a half, 3/4, and 01, you got about 40,000 lots being traded. Now again, if you don't believe there's value in order flow, just looking at that tells you, hey, there is support there. There is buyers, both passive buyers and people buying the offer. You do have sellers, of course. I mean, obviously you can't have a buyer without a seller, but you're at your low. What you're interested in is, are there a lot of buyers? And yes, there are a lot of buyers here. Just do the math. 6,000, that's 12,000 plus the residual, so 13,000, 23,000, 31,000, and then you got another, 4, 7. It all adds up to around just over 40,000. So what's going to happen? Are we going to get through this level, or are we going to hold? That's why I drew these lines here, because I wanted to see what was going to happen. Now, again, I was talking about, if we're going to rally, where are we going to rally to? I do know we have some volume up here, just, maybe about a tick higher. Yeah, 1611, 1254, 2700, 4000, 6000. So there is some volume up here, and I felt, can we get past this or not? And I saw some price rejection there, so I do know that there was some volume up there that we can't necessarily get past. We came back down. Again, you can see some decent volume being traded here, 4,000, 7,000, 6,000, 7,000, 6,000, and we just bounce around in here. Boom, boom, boom. We start putting in some more volume right above these levels, 118.01 and 01 and a quarter. And then you finally start, even here, again, honestly, I wasn't expecting to see this heavy volume here, 10,000, 13,000, 18,000. I did not expect to see that when I was talking about this earlier. I just expected to see more volume like this, that we're seeing 4,000, 7,000, 6,000, which, sort of lined up with this heavy volume earlier. So we put in this volume here. So what's going to happen? If we get past this, I think the market, what's going to happen? Can the market go up? Yeah. If we get past it, or if it's going to hold as resistance, the market will go down. Just like here, if we get past this level in the next bar, I expect the market to fall over. Or if we get past this level up here, I expect the market to rally. And boom, what happens? We start getting past it, aggressive buying, 4,000 here, 8,000 there, and we just, 11,000. We we get up, we get on up, and we sort of hold above this upper band here, which, this was your resistance before. Now it's become your support, and this is where we are right now in the evening session. So this was, a decent move. It's a 5 years. One tick is, it trades in quarters, so one tick is, $7.81. And 5 years isn't necessarily a market that you get a lot of movement in. So if you could get, anywhere between 4 to 8 ticks on a move, that's good. I mean, sometimes you can get a lot more. It's it's what I call, it's like one of those sleeping giants. Sometimes when it starts to move, you can get some massive moves in it. And it's a good contract, for people that are relatively new to trading, that, want a little bit more safer contract, because, to me, it's what I call a safer contract, because it has a lot of volume in it, so getting out is not going to be a problem. The only issue you may have is you might not get the big moves that you like, but that's the trade-off. But it's a good contract to sort of cut your teeth on. If you're looking for something to trade that doesn't have a lot of volatility. Of course, I say doesn't. Michael said doesn't have a lot of volatility. I could trade it, and then boom, it moves 2 basis points the next day. In general, it doesn't. Keep in mind, if you're trading an interest rate contract and there's a Fed speaker like tomorrow, you also got Janet Yellen speaking. Be careful. And if you're trading an interest rate, you're trading a jobs number around, around an inflation report or anything like that. Be careful, because inflation and interest rates, are the numbers, move the inflation numbers move interest rates. So, understand what you're trading. Don't think that, well, Mike said, it's a low volatility market and it's always going to be low vol. No, it could pick up at any point and start moving. It's your job as a trader to recognize that. So, those are 3 things that were very interesting in the markets today. And again, I try to keep these short. I don't want to go on too long for reasons. People, I think, get bored sometimes with what I have to say, and I tend to go off track sometimes. So thanks for watching this. To learn more about order flow trading and the software, visit my website, orderflows.com. Thank you, and I'll catch you hopefully tomorrow. I'm trying to get a video out every day, just instructional, because every day there's something interesting to talk about in the market. Order flow is so complex that sometimes people feel overwhelmed. But when you learn the basics, how to read an order flow chart, how to read imbalances, how to read delta, what seems complex becomes very easy. And like I say, it's like driving a car for the first time. You don't know what the fuck you're doing, right? I know me personally, before I drove a car, I drove a tractor. Okay, but there's a big difference between driving a car and driving a tractor. And to be honest, I was a bit scared. I don't want to say terrified. I was just a bit scared, because it's me, my driving instructor, my best friend, and one of my friend's brothers. That was my group in the car. But I thought, I thought, hey, what, I could kill everybody. But hang on, sorry about that. But then, just anyway, and after a while, right, with driving, it became second nature. I didn't need someone to tell me, slow down, use the turn signal. All this stuff becomes second nature. And, that's what, trading should be to you. Reading the market, things like that, like things I just explained to you, should become second nature. You should be able to internalize that and see that. Now, again, and it's not something that you have to sit down in front of the screen and, try and decipher. I mean, it should be clear. If it's not clear, then don't take the trade. It's one of those things, like when I was working at JP Morgan, we'd always have to do these ethics trainings. Every 6 months, you got to do, anti-money laundering. They ask you these questions. Oh, if a person comes to you with a suitcase full of cash, should you take the money? Well, it's one of those questions, it's so obvious, the answer is so obvious, that if you have to even think about it, it's wrong. And, same as with trading. If you got to sit there and try and justify taking this trade, how should I take this trade? Because the way the delta is. No, you should know by looking at the delta, seeing its decline. Hey, yeah, this looks good. I should be taking that. That's the point you want to get to in trading. And, that's why I do these videos, to help people get to that point. People, write to me, they say, hey, it's all making sense to me. That's what makes me go on and make these, videos. I do get some hate mail, but still, That's fine. There's always going to be haters. I don't care. People could tell me, "Oh, Mike, you're a stupid idiot. You don't know what the hell you're talking about." I don't care. These people are anonymous to me. They're anonymous to the world. They like to sit behind the keyboard and critique everybody. They don't go out and put out anything of their own and, share anything with their own. I do this because, I want to teach people, whether you buy my software or not. If you do, great. I get a little bit of money from it. But, really my goal is, in life, I feel like it's my obligation to teach people what I've learned about trading. Because, when I started out in trading, I thought I knew everything, and turns out I knew nothing. And by meeting other traders, on the floor, off the floor, working at CTAs, I dealt with a lot of the big CTAs, John Henry, when he only had 100 million. I remember when John Henry had, $100 million, and that was like, wow, he's got $100 million. That was a lot of money, for a CTA or a fund to get an allocation of $10 million back in the 90s was a lot of money. Now, if you're a hedge fund and you don't have $100 million, you're not even on people's radars. That's how the industry has changed, and it's grown. Luckily, I was fortunate to get in at the time when it was still, I'll say, in its infancy, but still sort of growing. And you could, depending on where you worked, you did have access to brilliant traders. So anyway, guys, that's it for today, and hopefully I'll get another video out tomorrow. Thanks.